Hello, hello, and welcome to Losers Become Winners for August 2020, August 24, 2020. Alphas are in the lead, continuing with PGR at 24%. There is the chart right there at 24%. There is our chart. Remember, last week I mentioned that this was a nice, good, steady income. This is what we nice ideal. Now, we went into Doji here. That could mean an OTA on Online Trading Academy. That which we call your rally-based rally. Now, we have a nice uptrending on the MA, so the high probability and the indicators below, we have a high probability that this will just rest here for a couple of days and then continue up, and that will get alphas a winner. Okay, so now we're going on to XLV, and XLV it came close right there, crossed, but didn't stay below, so it's still holding on to waiting for an established close to be set here. And why are we walking through the 30-day moving averages, but we don't do it with the Tigers? Well, the Tigers have established exits because of price channel. You can see price channel right there. Say, okay, look, you touch that third rail, you're out of the game. Here in 30-day moving average, we have to wait for a close to occur in the warning track, then set the low. So let's go over now to let's look at what happened to it Walgreen, because that's going to be a pretty nice example there. Walgreen here is Walgreen, and Walgreen had the Tigers did get stopped out of Walgreen. This was the Tug-A-War that I was talking about last week, and right there the Tigers got into the trade up here and never got a profit zone and exit rule, so they got stuck down here at the green price channel and got stopped out today. So let's get that out of the way, because I'll save us one discussion when we get to the Tigers. They got out a 55% loss in 14 days. 244 was the loss. One contract, $2 in fee, rounded up to 246 for the trade, 759 for the carried owed, with a new owe of 10.05. Now the alphas are still in the trade. Why? Because they didn't have a close above the 30-day moving average. Now indicators down below give it potential that this just might be one of those drop. A little bit of dojis are considered rest zones, and then the price will continue in the lower direction. That's what the laws of probability, but nothing is perfect in the world of trading. Okay. Then so one Tug-A-War for the in the Tug-A-War, the Tigers lost and the alphas are still in the game. Okay, coming on now to CBS. And CBS, okay, there it is. And CBS is, look at this. Now I bring this to your attention because what's happening here? Up in this zone, somebody put a lot of money in the CBS and decided to take the profit off the table. Remember I mentioned in the past, portfolio managers' mantra is buy the discount, whatever the discount rules are, sell on the profit gain. That's how they work. So the general rule is 20%, but it could be 15, it can be 25, it can be as high as 30. It all depends on the in-house fundamentals. So they'll go back and look at the in-house fundamentals, then they'll look at their charts, and then they'll go with what algorithm and say, okay, this is our out. And that's how they do it. And then the traders sit there to make sure that the computers are doing and executing correctly and on time. So how we can figure out where that was at? Well, if we go 67, right there, 67 seems to be the sell zone. So we go 67 at 80% on the 20%, $53. So now let's go back and find $53 and see what the action was at $53. And man, we have to go back a long time. See all this action? It's all flat. Traders don't like that. They don't like that flat action. There it comes. There it comes. There it comes. $52. Look, there it is. There it is. $52 was their buy zone. Because what happened? Look, it came down, got some buys, came down, retested again, got some buys. So whoever's down here at $52 is buying it with a nice, and look, I put down 53.60, And I'm in the ballpark right there, 53.60. We right in the middle. Look at all the candle cuts at 53.60 right there. That is what happened. Now, why does CBS take such a long time? This happened back. Let's go look at this. This happened back in March, the crash of March. And the traders sat there waiting and waiting and waiting. Now, why would the traders wait? Well, money got out here at 70 and still flatline here at the 62, and then we get back to where we are today. Now, the point coming down to is the traders buy equities. We're options. The learning lesson here is this. When you buy a stock, you don't worry about time decay. So, and Mark Magavini was has a mantra rule. He gets into a stock with the intention of staying in the stock for a minimum of 6 months and getting out slightly over 12 months. Now, why does he want to get out slightly over 12 months? Because of capital gains tax. Now, he'll get out under 12 months if the trade doesn't work well for him. But if the trade is holding its ground and not losing any money toward the end of his in the 9-month period, then he waits it out for the 12 months and then exits the trade with profit to get out with capital gains. And yes, he is a 20% take profit, but he's equity trades, not options. Options, we have time decay. That's why we have to look to these areas and say, okay, we're making profit, but do we want to stay in this trade for all this time getting through time decay? And that's the lesson here being learned, is you gotta watch your action and look out to get out. All right, that said, let's take us now, that takes us now to XLE. Now, XLE is another trade, is another tug-of-war with the in the alphas. Now, this tug-of-war is still active. Look what happened. We have a call here on the Tigers, and we have a put here on the alphas. And the Tigers came on down. Their stop is still here. Remember, the Tigers got up here on the high end of the price cycle, which is unfortunate, but it happens. And then they got into this pullback. But their original initial stop is the green price channel. So now they're stuck at the green price channel, and price comes down and hits right in the zone here, and it starts climbing up, which is not good for the alphas. Remember, this is a tug-of-war. The alphas don't want the price to close here. They're in the put zone. So this is going to be an interesting play in the next couple of days. I would probably say tomorrow we might get an opportunity to see if we're going to get a close here in our 30-day moving average zone. That said, we got now RTX, and RTX is running right here. And again, that's a put. So we happen to get an exit triggered. An exit setup has been triggered right here at the high of this candle because it closed above the 30-day moving average, and the indicators themselves down below are saying, well, it's not looking good. So it happens, it happens. Now we go on to Bank of America, and at Bank of America, we have quite another situation. There it is. And I do it this way because this way I don't have to keep adjusting the screen all the time with the Thinkorswim auto zoom. And it happened here also. Bank of America is in a put, and we got to close in the track. Remember, anything in the track zone or above is going to be the declaration for the stop. And here it is. The top of this candle is going to be the stop for Bank of America. And if it breaks above 25.71 tomorrow, we are out with another loss for Bank of America. They already owe us 17.85. So, that's okay. They'll keep my money for a short time because remember, I have Winner's Circle winners proof back from September 2019. And if you go back, you'll see I had lots of good exits back then. So what's happening now is we're going into a little shift here in changing our changing our rules of exit, which unfortunately is not maybe proving as well as it should. So we have another couple of weeks to test it out, and then we go back to evaluate and do a shift. And that's important to know. Another good lesson here. If a trade system is not working for you or not producing the results you desire, go find something else. Now, don't get too crazy trying to find one that's going to give you 100 ROI return in options in 24 hours. I have yet, It happens, but it's very rare, extremely rare. Day traders and options, there is a possible there, but they're buying such a tiny position, and they're pouring a lot of money into the trade to make a big profit. Okay, well, let's finish up now with the Tigers. And over here at the Tigers, we have to go to right here. And in the Tigers, we're going to look at XLF. And XLF is, remember, now why are the Tigers, I don't go through all the Tigers, because the Tigers have established easy exits right there. There it is, right there. We can hit that, and we know we're going to be out. We can see the exit coming, and we can get ready for it. In the 30-day moving average, you do not see the exit until the close is in that yellow zone. And with that, we're going to conclude today's report with losers become winners with PGR at 24%. And I thank you very much for checking out, and be well. Take care. Bye-bye.